There's all this talk about inflation, whether you're turning on the TV, whether you're reading it in the paper, reading about it online, hearing about it in the media, or whether it's even just coming directly from your wallet. You're seeing it at the grocery store, you're seeing it everywhere, whether it be gas prices. I just bought dog food and it's crazy how everything has gone up. These are all inflationary items that we're paying for each and every day. And there's a direct correlation here to the Fed rate that we're also hearing talk about, inflation and mortgage rates. So I want to kind of illustrate this here. If you kind of look at this chart, this kind of goes back to 1978. Fed Chairman Burns in 1978, inflation went from 7% up to 14%. The correlation there is when inflation goes up, mortgage rates go up. So you see mortgage rates went from 12 to 18%. In 1980, Fed Chair Volcker came in and increased the Fed rate from 11% up to 20% over a 2-year period from 1980 to 1982. The inflationary response to that was inflation went from 14% down to 5%, and mortgage rates followed that, going from 18 to 12. So the consequences or the result of that was mortgage rates going down, the stock market taking a big hit, and we went into a recession. Okay. So if we kind of go back and we look at the 90s, here's another example here. Chairman Alan Greenspan, inflation goes up 1.75 to 3.5. Mortgage rates go up. The Fed rates go up from 4.75 to 6.5. Look what happens to the inflationary response. It comes down, goes down to 1%, and down with that comes mortgage rates. Result of that, stock market takes a hit. We go into a recession. And now here we are today. Chairman Jerome Powell, inflation is out of control. This says 7.9. It's much higher than that. It's in the 8s, in the upper 8s. Mortgage rates are also not at 4.5. They're in the upper 5s in some scenarios. So we're seeing inflation going up, mortgage rates going up. The Fed is talking about raising the Fed rate. They've been doing that this year. They talked about getting it up to 1.75% by the end of 2022. We saw the Fed raise rates in May, up 0.5%. We saw them at their June meeting. It was slated that they were going to raise it 0.5% in June, in the middle of June, and they were going to increase it 0.5% the end of July. So there's 1.5% right there, and then more to come after that. What actually happened in June was they increased it 0.75% instead of 0.5%. We saw the mortgage market rally just a little bit. We saw a little improvement in pricing, but what that is the Fed is realizing that inflation is out of control and trying to bring that down. So if we can see the Fed rate continue to increase, then what that does is inflation will come down. Down with inflation comes mortgage rates. The result of that, our stocks will take a hit and will likely go into a recession. So history leaves us clues. It tells us what's going to happen. This is a direct correlation of what we can expect to happen through a recession. We continue to see home values go up or stay level, and we see mortgage rates come down. So great opportunity here. Understand what's happening. Understand what you're hearing in the media. If you're not understanding it, please reach out to us. Reach out to your trusted lender so that we can help you through this process of you purchasing your new home.